Hello and welcome to NDTV Profit. You're watching the Mutual Fund Show. I'm your host, Neeraj Shah. The topic that we've chosen today is tech. And there is a reason why we're talking about this today. And the reason is this, that for the longest time, at least the last 4 or 5 months, 4 or 5 months is a long time these days, we've heard people say that you should try and bet on tech stocks after the US elections. Uncertainty is out of the way. Now we are 1 month away from that, and markets don't give you returns after the event has happened and the news is discovered, or at least the returns are not outsized. So the question that we are trying to address today is it a good time therefore to start an SIP or a lump sum or a tactical investment into some of the tech funds, considering that the US elections will be over in a few months. There is also the ISG data which came out, which showed that there was some optimism, though ISG has maintained the guidance, but the Q2 deal flow or the Q3 deal flow, as the case may be, was very, very strong. And therefore, will Indian IT firms have the chance to actually deliver good returns in the next 6 to 9 to 12 months? That's the question that we ask our experts today. Mohit Gang, co-founder and CEO of Moneyfront, and Vishal Dhawan, founder and CEO of Plan Ahead Wealth Advisors. Gentlemen, both of you, it's such a lovely thing to talk to you, both of you today. It's been a while that we've spoken and on the same show. So thanks for joining in today. Thanks for taking the time out. And great having you both. Vishal, I'll start with you on this one. What's your sense about making a tactical lump sum or an SIP for a short period kind of an investment into Indian tech companies or Indian tech funds currently?
So I think a lot of this, needs to come from where the macro environment is today and what does the outlook look like. And, the ISG report that you referred to also picks up certain threads around the macro environment and tries to build a case outside of US elections. Since you spoke about US elections, it's very interesting that, when you look at long-term data, most times the outcome 12 months after the event has been largely positive. If you go back to the last 8 elections in the US and you look at data on the S&P 500, for example, 1 year after that, you'll see that virtually always the S&P 500 has done well. Of course, no one knows the future, but that's what the past data shows. Having spoken about the elections, it's important to go back to, what was holding back IT businesses. Essentially, one was high interest rates. So we've seen the first signs of rate cuts starting to emerge. The US has cut rates. The US Fed governor has said that, he's happy to, the Fed chair has said that he's happy to sort of continue this journey, especially this weakness in the US economy. The ECB has been cutting rates. You are seeing, financial services, which make up roughly about 25% of all, contracts in IT, starting to, show some benefits which typically come through from falling interest rates. So there is a environment in general which is more positive for IT companies. On top of that, for Indian IT firms, you also have the rupee depreciation potentially adding another 0.2 to 0.5% on margins because the rupee has been depreciating. Now, the important element here is, how much of this is already priced in, because obviously if you want to go ahead and, buy a business which is sort of in IT services, you need to be aware about valuation. So valuations for IT firms in India are roughly at about, close to a 30 to 35% premium to long-term averages. And therefore, it's not necessarily a cheap market that you want to buy into. And therefore, we would suggest that investors need to be very mindful of that maybe some of this is already priced in. And therefore, if they're looking to invest, they'd much rather go into more gradual investing rather than lump sums and go in with a longer term investment horizon. And obviously, not all investors can go in. It's probably aggressive investors who can go there.
Okay. I have a follow-up here, but first let me get in the opening thoughts from Mohit on this one. Mohit, like I said, great having you on the show. What is your thought here, Mohit? Because the the bear could argue that the commentary from the IT firms isn't quite looking that great. The bull could argue that we are waiting for that one major event to be out of the way, and some of the commentary, the ISG data, etc., that has come out, has mixed, let's say, mixed outcomes, if you will, or mixed cues, but still has some optimism too. Would you or would you not recommend tactically allocating into IT funds? Mohit, can you hear me?
Sorry, yeah.
Mohit,
Thank
you're
you
on
so
mute.
much.
Sorry, yeah.
I was on mute, sorry. Thank you so much, Neeraj. Always a pleasure speaking with you. Look, honestly, I think the time to enter the IT space was perhaps the right time to enter the space was about 6 months back. I would not say that you are quite late in the rally right now or quite late in the business right now. If someone is of the aggressive mind bend and looking at the way we are poised for the rate cycle reversal by Fed and also by the central bank in India, I think both augur extremely well for the IT sector. IT somehow has been a sector which is extremely rate sensitive. And typically, whenever the rate cycle reversal happens, IT has seen multi-year growth from that time onwards. Honestly, if you see last calendar year, there were fantastic returns from IT. If you see the IT index today, last 1 year return has been almost 34 odd percent, right? So a good chunk of the rally is already in. But again, as I said, I think the rate cycle has just about started, right? So US has just gone with a 50 bips rate cut, and perhaps in November we might just see a 25 to 50 bips further rate cut happening, and RBI might follow suit in the next policy meet. And from there on, you might just see a cycle of reversal happening for a year at least, if not more. Right. So with that in perspective, which is the larger perspective, I would say A, it's a good time. B, I think obviously US elections, which is one big roadblock, I think mentally is almost we are about to get over. And as you rightly mentioned in your opening comments, there is no point getting into a thing after the news flow is out, right? So you have to make sure that you are in the play right now. So if someone really wants to take this as a tactical call and obviously aggressive profile, as Vishal rightly mentioned, then I think perhaps the right time is to enter right now and not delay it any further, not even postpone it by a quarter or so, because I think by then maybe you will have one more rate cut by Fed, you will have some concrete indication by RBI on rate cut, and you will have the US elections also out. So almost every positive news flow will be out by then. So if someone has to enter in, the time is now.
Time is not. Okay. So Mohit, would you wait for an event or earnings upgrade or clarity, or what is it that would you wait for before you take a more constructive call on thematic funds, particularly from the tech space?
Look, honestly, I think the earnings season is on right now, right? And you've not had a great beat from TCS, but you've had a reasonable number set from HCL. So my sense is there are two ways to look at this, Neeraj. Either you look at the IT index per se, you have 10 heavyweights out there. They are reasonably priced right now, and I honestly don't see a huge upside. But then you have a other way of playing the IT space as per se is to go into digital funds or technology funds, which are more open-ended in nature and where you will have a certain amount of mid-cap IT also in the play. My sense is those are better plays where you have slightly more smaller names and perhaps the growth stories out there are quite reasonable. Though on the valuation front, again, they're not very cheap. They are quoting at a 10-year average band or maybe a little higher than the 10-year average band, in fact, but nothing good in India is coming cheap right now. Right. So having said that, my sense is if someone has to really enter the space right now, they have to perhaps look a notch below the IT index, try and capture a digital fund or an IT fund which has some bit of mid-cap IT also in it. And yes, I think the right time is right now, as I said.
Okay, okay, fine. Sorry, I misunderstood, Mohit. Excuse me for that. I thought you were saying that you want to wait for a bit and not currently. So I'm guessing that is not exactly what you said.
No,
right?
no.
Yeah.
I think my call was that someone should have entered 6 months back, but even today, I think it's a reasonable time to enter in, but not delay it further beyond a quarter or so. I think then bulk of the thing would be out of the play.
Okay, Vishal, just wondering, do you think that the US election outcome getting over could itself be a sentimental trigger of sorts? Because everybody was saying that all US firms will make their decisions after the election verdict is out of the way. We heard some companies in private conversations talk about that. And frankly, I mean, the other underlying factor is that their main clients, which is the banking companies in the US, have delivered decent numbers and the guidance, right? From a Citi to Goldman to whatever. So can the US elections be a big trigger or not really?
So we don't think so, because again, if you go back to historical data, it's hardly mattered who has won the election. It's not even mattered if the person who came in was not the person who the markets expected to come in. So if you go back to history and look at the last 8 elections, except for 2000, when there was this big tech crash that took place, which everyone knows about, and you looked 1 year later and you were sort of on the back of the 9/11 crisis that happened as well. In all other periods, within a year, markets typically did well, from a US perspective. So I think our sense is that what you want to watch more carefully is how interest rates move and what follows the interest rate cycle. So I think a lot of the expectation is getting built in around lower interest rates in the US. And I think it's very interesting if you look at the data very carefully about how interest rate cycles work. So on an average, lower interest rates obviously are good for equities. And tech is a part of that entire piece. But if you break it up into looking at it, if the interest rate cut was sort of accompanying an economic expansion or a recession, you see a very different picture. So all the good stuff around interest rates happens when there's an economic expansion accompanying the interest rate cut. If there is actually a recession that happens and the interest rate cuts are, sort of primarily driven coming from there and continue to be sharper because the economy is not doing well, then you would imagine that that's not a good time for IT, because a lot of businesses are then going to look at how do they cut cost. I mean, some of it, of course, will be, offshoring or, moving some of their processes out. But that's when I think there is a tendency to much more find that the impact of interest rates going down is lost on IT businesses because they just don't get the orders that they were, hoping to be able to get access to.
Well, viewers, we have, in some sense, a bit of a contrast in views, and which is always good to have, because you should hear both sides of the call. There is no right or wrong answer. For every stock that is sold, somebody else is buying that stock as well. It's always a hypothesis. So whichever view you subscribe to, you can figure it out. Now, let me just try and nail it down before I get queries. Mohit, if you're at a liberty to, and if you can tell us which funds, it need not be an exhaustive list or the only list, but examples of one or two funds, then people can consider if they do want to not delay the decision for less than a quarter, for more than a quarter, sorry.
So look, I think Pru ICICI Technology Fund, Tata Digital Fund, these are a couple of names. And obviously, as I said, IT index per se also can be looked at, though I am a little more keen or more tilted towards the mid-cap IT space, a combination of mid and large cap. So I would rather go to an open-ended technology fund out there. So yeah, those are a couple of my choices.
Okay. And Vishal, just a contra question. So while you may not be completely in favor of a tech fund, but there are a couple of, I believe there are some funds which do not have an IT services presence, but a lot of other tech company presence as well. Could those be looked at, or is the overarching weighted still in favor of IT services, and therefore you would rather avoid?
So I think the way to think about this is an SIP, assuming that you're really thinking longer term. You do believe that the whole trend towards digitization is not going to get reversed. You are seeing even in the ISC report, how AI, for example, makes up such small components today of the entire revenue stream of IT companies. And, it's still anywhere between 5 to 15% only. So there is potentially a shift that is also taking place there. So we think that if investors are thinking about this, then they may look at two funds in the space through an SIP, either the Birla Digital India Fund or the Tata Digital India Fund. So both of them are options. But clearly, for aggressive investors going through an SIP and having a long investment horizon, to not worry that, you know, is some of what is happening excessive right now, and therefore they're going to look back and say that, oh, I exited too early because I came in, but then I lost patience and then I left.
Okay. Okay, gentlemen, thank you so much for this. It deserved attention simply because so much of chatter around this election and what do IT services firms do. So good to get that view. Now I have a few queries from our viewers, and I would love for you guys to try and help our viewers as to what they should do. Standard disclaimer, of course, viewers, when you're hearing from them, please do your own due diligence as well. And if you're not completely sure, please keep the services of a financial advisor. It truly helps. But nevertheless, you can come to shows like ours and try and understand from experts that we call. The first query is from Sundar. Sundar is aged 61 years. Sundar is a first time. Sundar says, I'm a first time investor who's looking to invest up to 50 lakh rupees in lump sum with a 7 to 10 year horizon. Can some names be suggested? It's a lump sum that Sundar wants to do. Mohit, let me start with you on this. Is a lump sum a good idea? And even if it's not a good idea, since Sundar wants to know about a lump sum in strategy, do advise him.
Look, Neeraj, honestly, I think at his age, he's starting at age 61. And honestly, at that age, I'm not pretty sure of his overall financial this thing. But I'm assuming out here, if he's going ahead with a 50 lakh kind of a sum, which is a largest sum, and is keen on lump sum, then he is properly planned and properly allocated on fixed income, and his other retirement corpuses and other things are well taken care of. Look, I would still not suggest a lump sum investment at the current market levels. I would request him to stagger it out from in a 3 to 6 month kind of an STP bucket. If I were at this junction, start a fresh portfolio, I would go with a Nifty 50 index fund, a Pru ICICI Nifty 50 index fund, a UTI Nifty Next 50 index fund. These will be the two choices on the large cap side. I would go with a flexi cap fund, which could be a Franklin flexi cap or a Bandhan flexi cap, and a quality mid cap fund, which would be a DSP mid cap 150 quality 50 index fund. Right. I would still avoid any aggressive equity, a sectoral thematic or a small cap equity for his profile, because he's a first time investor, and then maybe a hybrid or a balanced advantage fund just to give a slightly more conservative tilt to the portfolio. Perhaps a Pru ICICI balanced advantage fund to just add to the entire mix.
Vishal, your answer differs?
I think for first-time investor, assuming everything else, cash flows are taken care of, etc. If you're trying to do a lump sum right now, to us, it seems like only a balanced advantage fund or a set of balanced advantage funds, and maybe an equity savings fund is the right choice. I think we are in market valuations which are very premium. And what you want to do is, even though you have a 7-10 year investment horizon, you don't want to panic along the way. So I think if you look at risk-adjusted returns in this environment, a good equity savings fund and maybe a good balanced advantage fund combined together could probably be a good starting point for Mr. Sundar.
Okay, fair call. Vishal, the next question, I'm starting with you. R. Ravichandran, age 65. We're getting a lot of senior investors today. Mr. Ravichandran invested 10 lakh rupees in Quant FlexiCap fund in June, but the fund has performed poorly compared to peers, he says. And therefore, he's asking whether he should continue with this fund or switch to a Motilal Oswal multi-cap fund. I'm adding a bit of a layer or some other fund. The goal of Mr. Ravichandran is long-term wealth creation.
So I think it's very interesting that we are talking about the underperformance over a 3-4 month period, and decisions being made on that basis, which we think is probably very suboptimal for any investor. It's not a reflection on Quant FlexiCap, but it's a reflection on the fact that I think trying to find performance data over 3, 4, 5 months and then making decisions to enter or exit is probably an inappropriate strategy, especially for investors whose goals are long-term wealth creation. So my starting point would be that you need to sort of start thinking much longer term. If you're thinking about underperformance, look at fund carefully, but don't act on it at least for a couple of years before you start actually fiddling around with the portfolio. I think, if I reflect back and think back, saying that, if I was Mr. Ravichandran in June and I was trying to make this decision and I'm 65 and I do want to create long-term wealth, would another flexi-cap fund, for example, have been a superior choice? And we think that if one is trying to look at only one fund to pick in that bucket, we think the Parag Parikh FlexiCap Fund actually fits the boxes very well for three reasons. One is it gives you access to largely Indian equity. Second is it gives you access to some portion of the portfolio in international equity, roughly about 10-12% now. And the third is that the manager does end up using cash if he does end up believing that market valuations are not supportive. And while that can lead to underperformance in shorter periods of time, I think for investors who are sort of depending on funds to make some of their decisions on their behalf, I think it suits the investor quite well. And obviously they have a great long-term track record, though their recent performance may be slightly suboptimal.
Okay. And frankly, Mr. Ravichandran, you could have picked up any fund and that fund may have underperformed over the last 6 months. And it is very likely, by the way, that you may swap and then the fund that you are invested in may start performing well as well. So I think that point is that shorter term may not really work. Maybe Mohit, you can give a quick shot to this one because I have one more query waiting, but a slightly quicker answer from you if you can to this query.
Look, honestly, we've been tracking this fund for a fairly long while. On a 1 year, 3 year, 5 year scale, the fund has beaten the benchmarks extremely handsomely. And my sense is, if I'm not wrong, Neeraj, the performance for last 1 year for the fund would have been over 50% returns, right? So I don't call it underperformance by any stretch of imagination. It is very well possible that he's comparing in a very short tenor and perhaps looking at other categories or looking at some other funds in his portfolio and taking that conclusion out. I think it's a great fund. He needs to hold on for a fairly long time.
Okay, well, again, Mr. Ravichandran, you've got kind of a complete round view. If you're bent upon changing, Vishal has given you some options, but the common answer seems to be that don't look at it from such a short perspective. Okay, we have few minutes left. We need to put in one more query from Arbain Kazmi. Arbain Kazmi is aged 57 years. Arbain says, I have saved up to 2 lakhs over the last couple of years and would like to invest the amount in mutual funds. Sadly, I do not have both. I don't have the targets or the risk appetite or the time duration. But with an assumption that it's moderate risk appetite and let's say for 10 years, because I don't have any other responses here, but let's help Arbain figure out which funds should the allocations happen in. Mohit, can you help please?
It looks likely from the nature of the query. And at age 57, if someone has saved 2 lakh rupees over last couple of years, that means an extremely hard-earned money and needs to be preserved pretty well. I would go extremely safe with this allocation, Neeraj. Out here, I would perhaps advise a balanced advantage fund, which could be a Blue ICICI balanced advantage fund, and maybe a conservative hybrid fund or a multi-asset fund to top it up. But otherwise, I think the investor here needs to be extremely careful about this pot of money and only go with balanced choices or conservative hybrid choices.
Okay, Vishal, any different thoughts here?
No, I completely second Mohit's thoughts on this one. That
okay.
I think with the data available, it's probably a good idea to tilt towards being more conservative rather than trying to sort of catch the trend that we are in.
Okay. Do we have time for one more query? Maybe we do. Okay. So very quickly here, Vishal. Rabindranath, age 35, says, I want to take advantage of the global Semicon theme. Any funds can be suggested. Any thoughts, Vishal?
So I think, India doesn't really give you a lot of access to thematic sort of opportunities, in my view, specifically around semiconductors. So you are going to be dependent on either going to a sort of flexi cap or a multi-cap fund where the manager picks some of this, or you might have to pick a thematic technology fund, either in India or overseas, to take advantage of this. But if you do want to consider meaningful allocations, then you might want to think about using the LRS limit available to you. Of course, it comes with reporting implications, taxes, etc., which are different. But think about buying into a global semiconductor ETF, which could give you access to this theme in a much more structured and defined manner.
Okay, afraid we are out of time completely. I would have loved to take more queries, but I think we've addressed 4 today, which is more than what we usually do. So, gentlemen, both of you, thank you so much for coming in for something which was probably very basic on the queries side and fairly esoteric on the thematic fund side. So, really appreciate you traversing both ends of the barbell. And to you and yours, if we don't meet before Diwali on air, happy Diwali and a prosperous New Year.
Thank you, and wish you.
Thank you so much. Thank you for being here.
Thank you so much.
Great.
And viewers, that's all that we have the time for. Thanks for tuning into the Mutual Fund Show.